Good afternoon, ladies and gentlemen. Welcome to Market Today. We have the last half an hour of Friday right there in front of you. The Nifty is caught in a very tight and narrow range for the last 9 sessions. You've seen the Nifty consolidate between a low of almost 22,990 to a high of about 23,300. Even today, as we speak, the index is consolidating at a 7-month low, and this is how we stand at the end of the week. As far as the bank Nifty is concerned, we have a downtick of about 232 points. The index is now firmly around 48,358. Volatile trade as far as markets are concerned on HDFC Bank and ICICI Bank. And if you look at the components as far as the broader markets are concerned, we have a negative tick on advanced decline. 443 shares are in the green versus 1971 that are there in the red. So it's an easy 1:5. For every one share that is up on the Lal Street, there are 5 that have slumped. We track 19 indices for you. 18 are in the red. The lone index, which is in the green, is the Nifty IT index, up about 174 points. In terms of losses, it's the pharma index which is suffering because of Dr. Reddy's dismal third quarter earnings, down 2.2% at 21,850. The small cap index has been taken out for the cleaners, 2.3% lower, 16,945. Out of 100 shares in the small cap index, only 12 are in the green. Look at the Nifty Realty index. It's been pounded black and blue for the last 2 weeks or so. 2% down at 854. The Nifty Alpha 50 Energy Index, the aggressive Nifty Next 50, Auto and Mid Cap 100 indices are all in the red. What else is buzzing? And that would be a cue that is coming in from our very dear friend Mr. Nilesh Jain. He joins us on the show and is the head for VP Technical and Derivatives Research at Centrum. Namaste Nilesh ji. Your prognosis on the Nifty. This week, for the last 5-6 trading sessions, we are down about 1.2% on the index alone. What does the next week hold?
Very good afternoon to you, Shailin sir. See, the structure for the Nifty is constantly witnessing downtrend, and today as well, if you see, the morning gains have been wiped out. The markets have broken below the important support of 23,200. Now, the overall structure is hinting that Nifty is heading towards 22,800 to 22,700 for the coming week, and we expect extremely volatile week in the coming week because of the multiple reasons. We have budget. Ahead of the budget, we expect volatility to increase from here. We also have FN expiry for the January series. That's the monthly FN expiry. So given this kind of events, we expect market to remain extremely volatile. I won't be surprised if at all we see any sharp bounce on the back of a short covering move towards 23,300, 23,500 in the coming week. So in this kind of volatile environment, it's advisable to stick to the sectors and stock specific action. Index is not looking promising at all, so better to avoid.
Right. And that's a very sensible view that you are offering, Nilesh. Last 5 days left for the pre-budget rally, if at all, to take root. Nothing has happened except for smart gains, some here and there on some railway stocks, a few wagon makers, sometimes on Nereda, sometimes on Hudco. That rally has gone completely missing. PSU banks are not exactly in the best of health. Let's just take another detour into the market and talk about stocks that are now at 52-week lows, and there are so many of them, about 22 or 23 that I see in NSE 500 alone. Let me just take some names. Sobha Limited from the real estate space, now down 6.4% at 1145. In the month of January alone, the stock has corrected very, very sharply, down about 22, 23%, 28%. Last day I checked, it was 23%, now it's 28%. Accident of the day is Scient, down about 15% in early trade after a very dismal third quarter earnings. At the moment in the month, it's lost 22, 23%. SW Solar down 5% today at a low of about 338. There are many names that we've discussed so much on the long side. Look at JK Tires, 2% lower, 342. These are fresh 52 weeks lows that are coming in. Chennai Petro at 558, Gland Pharma at 1563. You have Tata Technologies at 783. All of these counters have slumped fairly sharply in the month that is gone by. Let's get Nilesh in terms of what he would like to do for Monday. Nilesh, are you carrying any short positions? Are you squaring them up, or is there a chance for a long position as well?
So as mentioned, we are focusing on stock specific action. So on the long side, the stocks that on our radar is FMCG space,
Yes.
specifically Britannia. So
Yes.
Britannia is something that is looking attractive at current level, given the kind of a breakout that we have seen. It has given a good consolidation breakout today with a good build up on the long side with OI addition of 5% today in this kind of a weak market. So that is giving a sense that Britannia may witness a follow-up move towards 5,200 to 5,300 in the coming week. With a stop loss below 5,020, Britannia can be added at current level. And on the short side, the list is a bit long, but I want to restrict to one or two stocks. REC Limited is something that is looking extremely weak. Constantly, it is forming a low top and low bottom formation. Looks weak for 435 to 425 kind of levels on the lower side with a stop loss above 455. REC can be one can go short in this particular counter. Apart from that, Voltas is another stock that is seems to be forming a rounding top kind of a formation. So this particular counter also looks weak, where short buildup can be seen in today's trading session. So looks weak for 1440 to 1400 on the lower side, with a stop loss above 1485. Voltas can be shorted.
These are the two trades that are coming in. We'll discuss this in a little bit. Let's just look at the earnings number that are coming in from Laurus Labs. The stock itself has surged 2.2% at almost 598. And let me just tell you what the numbers are. They're just a blowout that's happened on Laurus. Okay. Third quarter revenue is at 1410 crores versus 1200 crores year on year. So that's a huge beat. Third quarter profit is at 93 crore rupees versus 23 crore rupees in the year ago quarter gone by. EBITDA has shot up to 268 crores versus 180 crores year on year, and the margin has jumped substantially. EBITDA margin stands at 20.2% versus 15.2%. A fabulous show, and at a time when the pharma index is the top loser, Laurus Labs in itself is about 2.5% higher. Nileshji, what are the charts telling you?
Well, charts are looking pretty attractive because the stock is trading well above its long-term 200-day exponential moving average, as well as above its 50 DMA, which is currently placed at 567. So ideally, the stop loss for the long should be placed below 570, and it looks like it is heading towards 650 to 700 on the upside. If you just pull up a 4 to 5 year chart, the stock made a high of 717 in the year 2021, and seems like the stock is likely to make an attempt to test those levels from here, although that will take some more time, but gradual up move is something that we can expect from here. So with a stop loss below 570, one can stay put with the existing long position. Fresh long can also be initiated on declines.
Yes, remember these are blockbuster numbers, and the all time high for the counter was at 715 rupees, which we saw on August of 2021. From then on, it fell. It almost actually more than halved to 291 rupees in March of 2023. And from then on, ladies and gentlemen, it's been a one-way rally, now 600 rupees. Because of these results, the volumes are fantastic. 51 lakh shares have been traded so far. Yesterday's volume was 15 lakhs. So it's a 3x rise in volume, and let's look at how deliveries changed today. But keep an eye on Laurus. This is a fresh 52-week high, and given the earnings and Nilesh's view that you just might see an all-time high coming in fairly soon. Let's also look at some other numbers, and I just revisit Britannia. I'll request the PCR to fire a longer term chart of Britannia, and this is where strength is coming in. Okay. The price that you see on Britannia today is the highest since 12th of November, and this is a time when you've seen fairly painful markets. So, this is flight to safety, this is flight to predictability, and this is flight to a stock where we've seen a record high of about 6,400 in 1st of October, and from then on the stock has corrected all the way down to 46.85. Let us see what was the percentage correction, just a moment. It was about 28% in a span of 83 days. So, this is how it is, ladies and gentlemen, and look at Hindustan Unilever, look at Marico. These are stocks that are absorbing a lot of market fright and market weakness, and this is how it is. Lever is up 2%, but remember, for the last 4 or 5 years the stock has done nothing at all. It's just been in a sideways band. In fact, it's corrected from 3,000 rupees on September 23rd all the way down to 2,350. A swing trade in the making on lever, Nilesh bhai?
So in fact, all the FMCG counters have been hammered in the previous 4 to 5 months now, and now we are witnessing a kind of a pullback that you can call it. This pullback may extend as far as HUL is concerned. Looks like it has formed a good base somewhere around 2,300, and we may see a follow-up move towards 2,400 to 2,450. So purely to play this pullback, one can keep a stop loss below 2,300, and one can go long for the upside target of 2,400 on immediate basis, followed by 2,450.
Chaliye. This is the detail that is coming on Hindustan Unilever. We will also take this opportunity to look at the Nifty FMCG index chart. That will give you an idea as to what is happening in the market. Yes, see, this is how the stock index has corrected. You had 66,330 on 24th of September when the Nifty had also peaked, and from then on you have seen the index itself correct to the tune of about 17% as of yesterday, which in itself was a low of 7th June. So, that is the level of correction that is come in on the Nifty FMCG index. What you see is a 1 year change, absolutely flat, but if you see it from 23rd of September, which should be 3-4 months, you will see the index correcting about 17%. So, a long on Britannia, a short on Voltas, and a positive view on Laurus is what Nilesh has told us so far. It's 3:14, gentlemen. Let's just take a detour into the world of Davos and look at what Indian corporates are planning in terms of either future expansion or raising fresh capital. This is an exclusive conversation with Business Today, where Executive Director Mr. Rahul Kanwal was at the World Economic Forum in Davos, and he spoke to Mr. Parth Jindal, MD of JSW Cement and JSW Paints. He is talking about a plan to launch an IPO of JSW Cement in the next 3 to 4 months. The proceeds will be used to expand the cement capacity to 60 million tons from 20 now over the next 5 years. Please take a look.
We're very excited that SEBI gave us the green light, and we hope that within the next 3 to 4 months we would IPO the business. We have a very strong pipeline to go from 20 million tons to 60 million tons over the next 5 years. Ours is an integrated story. The waste product that comes out of the steel plant, the slag is getting used by us to make cement. The waste product that comes out of the thermal power plants or fly ash gets used by us to make cement. We are the most eco-friendly cement company in the country, and it's our endeavor to take our market share from about 3.5% today to 10% over the next 5 years. It's a very, very exciting space, and we are
also getting very competitive and crowded.
Yeah, very competitive. But we are using the proceeds of our IPO to pare down some of our debt, as well as bulk of it is going towards our expansion in North India, where we're setting up a greenfield site in Rajasthan. So our endeavor is to become a pan-India player. And to your point about it being so competitive, it is only players who have at least 10% market share who will, according to us, survive in the long run. The marginal players are all going to get squeezed out, and we're seeing a huge bout of consolidation. And I think the large players are purposely keeping cement prices very low so that the marginal players get squeezed out and consolidation happens. So if companies like JSW and others want to survive in this industry, we have to scale, and hence we're going in for an IPO so that we get that liquidity and that firepower to scale this business.
And that, ladies and gentlemen, is the perfect time to also look at how cement counters are behaving today. They were really enthusiastic after a very strong set of earnings that came in from Ultratech Cement. Let's look at the top performers in this space today and then get Nilesh's view in. So Grasim is up 1.2%, 2490. You have ACC up just about 0.5%. These aren't many gains at all. I tracked 32 cement companies, actually 39 cement companies, and out of 39 you have about 29 or so in the red. India Cements 5% lower, 295. The high for India Cement today was somewhere like 315. So that's a slump coming in. There's Prison Johnson down 4.1% at 137. The intraday high was 144 almost. KCP Industries down 4% at 213. This has slumped from 224. So intraday highs, because of a strong show by Ultratech Cement, have been sold into. Nileshji, any view on any cement counter that looks attractive to you?
Right, so one particular stock that is on our radar, and we have also advised our client to buy this particular stock, that is Grasim. So Grasim, very interesting setup here. This particular counter looks like bottomed out. It is making an attempt to cross its 200 exponential moving average that is placed exactly at 2500. So it is shy away from hitting that particular mark. If at all it breaks above the same, then the next target would be 2580 to 2650. And we are preempting that going forward, this particular counter should move towards 2650 to 2700 as well. So good levels to accumulate can be added on declines as well as at current level. The stop loss for the long should be placed somewhere around 2450, and this particular counter can be added and accumulated. Apart from that, Ambuja Cement is another cement counter that is also looking attractive. It is on the verge of a breakout from a falling trend line, and that particular level is placed at 560. So if it closes above 560, it's a buy for the next target of 600 plus, and then one can keep a stop loss below 535. So Ambuja Cement is another stock that should be one should ideally keep it on radar.
Okay, let's look at the volume buzzers today. We are now at 3:20, 10 minutes left in terms of the most active counters. It's earnings that are either getting rewarded like Ultratech or are getting thrashed. Look at Scient, now down actually 22%, 22% at 1351. Fairly strong volumes for this counter, 1982. I'll also request the PCR to fire the longer term chart of Scient. What you will see is a price of about 2000 rupees that we last saw about 6 months ago, and from then on it's been a one sided move. Almost you've seen the stock correct about 33-34% to what you see today, and of course today's fall is 22%. HDFC Bank and Reliance are both in the red, down about 1 and 1.5% respectively. Fairly okay volumes, 1926 crores for HDFC Bank, Reliance at about 1668 crores. There is Emphasis in the green, 3.5% higher. There's Amber Enterprises in the green, 3.6% higher, and there is Persistent plus First Source Solutions in the green. I am particularly marking stocks in the NSE 500 where you see a very strong traction on the green side despite a fall in the markets. In terms of gainers, I'd like to point out K Fintech. I'd like to point out Laurus Labs, which we've just discussed, 3.9% now higher. It's breached 600. So that's a very good quality stock that's doing phenomenally well. And I'll request Nilesh to take a view on Eicher Motors. This is also something that's come up in after a fairly strong correction. Your view here, Nilesh, 5-6 days of fall which are now being bought into?
Absolutely. So this is one particular auto stock that have shown an outperformance, and we have seen good build-up on the long side as well today. And in spite of the weakness, this particular stock is outperforming for last two consecutive session. Looks like it is heading towards a new record high from here. So the previous all-time high, which was seen on 3rd of January of 5,385. So looks like it is likely to test near about 5,500 from here. So it's a positional buy, can be added at current level, can be added on declines. Ideally, one should buy in a staggered manner, keeping a stop loss below 49.50, and positional target comes somewhere around 5,500.
Okay, fair point. That's the view coming in on iShare as well as Britannia, and of course a short that we are tracking on Voltas. 3:22, 8 minutes left. Let me just mark all-time highs, if any. There are none. So that's how it is, ladies and gentlemen. Any 52-week highs? None at all. So that's the status. Are there any all-time lows? Let me just check in NSE 500. Yes. Sadly, a name that I have come to talk about a lot, Tata Technologies, 783. There is absolutely no let-up in terms of sales and net exits. So this is at an all-time low. It was the IPO that people spoke about and made a lot of money, came at 500 rupees and then listed at 1300, and from then on over the last 18-22 months it's been a one side journey at about 783 now. Nilesh, would you want to guess the bottom at Tata Tech?
This particular stock has been one of the underperformer, as you have rightly pointed out. Post IPO listing, it has constantly witnessed a downtrend. Whatever pullback in between we saw, that was being sold into. The structure is still looking weak. It looks like it is heading towards 700 or maybe below that. So a clear-cut sell on rise structure till the time it doesn't reclaim 900 mark on the upside. Whatever pullback you see should be used as a exit opportunity from the long position, and the structure looks weak for 700 or maybe 650 kind of levels we might see from a short to medium term point of view.
Okay. Will that be an opportunity to buy at 650? We will be checking back with Nilesh at that point of time. Are there any volume buzzers that I'd like to mark? Yes, and most certainly among them is CGCL. This is the erstwhile Capri Global, 10% higher at 199.5. This is in the green, that's why I'm marking. There is Raymond, 3% higher at 1535. About 33.7 lakh shares have been traded, which is about 6 times the 5-day average. We've discussed Laurus in great detail, and there seems to be a bounce coming back in K Fintech, 5% higher at 1162. Apart from that, there is Maharashtra Seamless, something that we haven't touched upon quite a lot, and of course because of earnings that weren't appreciated by the market, it's Sona Comstar, 3% lower at 525. So that's the state of play. 6 minutes left. Nilesh bhai, anything that's caught your attention in the last 2 or 3 minutes of trade?
Right. So another is on my radar on the long side is Indian Hotel. If you see, this particular stock looks like it has formed a double bottom kind of pattern near about 750 levels. And for the third consecutive session, we have seen a positive move in this particular counter. What looks interesting is that today we have seen a fresh build up on the long side with an OI addition of 5%. So looks like we may see a follow-up move here towards 800 to 820. These are the levels one can watch on the upside. With a stop loss below 765, Indian Hotel can be added. Can also be looked at from BTST point of view. So Indian Hotel looks positive. Apart from that, we have already mentioned about Grasim, Britannia. These are few long ideas. Nifty Realty Pack is looking extremely weak. So that is something that can be looked at from a short point of view. So Prestige State is looking weak for 1200 kind of levels on the lower side. With a stop loss above 1320, it can be shorted. So overall, Realty Pack as a whole is looking weak from a short-term point of view.
Okay. Would you have a view on Bank Nifty?
Right. So banking has been one of the pain points since morning. We have seen an underperformance in the bank nifty, although it is respecting its 48,000 mark. So I'm waiting for that particular level to get breached before initiating any short position. Till then, I'm not taking any bet in the bank nifty index. 48,000 is an important support zone, both technically as well as on derivative point of view. If you look at the derivative data of the monthly of an expiring the coming week, the data shows that 48,000 has a good OI concentration on the put side. So a break below 48,000 will open downside towards 47,500 to 47,200. Till then, if somebody is already holding the long position, should keep a stop loss below 48,000. And there could be possibility of a pullback since the markets are extremely volatile and the VIX is somewhere around 17. So we are likely to see both sides of move. I won't be surprised if we see any spike towards 49,000. Maybe in the coming week, we may see that.
And anything that has moved in the last 2 or 3 minutes of trade, especially Voltas or Britannia or iShares, where you would like to revisit your view?
So Aicha Motor, it's a buy because the closing looks very good. 5,200 is something it is respecting and looks like it is heading towards 50 to 50, 5,250 to 5,300 levels on the upside. With a stop loss below 5,150, it can be bought. Britannia, again, a good close in this particular stock, somewhere around 5,100. So looks good for 5,150 levels, and with a stop loss below 5,050, one can still buy Britannia. So looks positive, and apart from that, REC Limited is something that is looking weak. So watch out for this particular stock. We may see another downtick towards 440 or maybe 435 levels on the lower side. So pullback should be used as a selling opportunity. REC looks weak.
Okay. That's the view that is coming in. 2 minutes left for trade. Nilesh, any preparations for the next week apart from individual stocks and the view that you've given on the Nifty and Nifty Bank? Anything that you're looking in from the earnings side which might attract traders on the longer side? And what preparations for the budget?
See, ahead of the budget, it looks like a more sort of a volatile session that we are likely to have in the coming week. We have multiple events, not only budget, we have monthly expiries. So we are advising to not to carry any aggressive long short positions, better to focus on intraday trade. Given the kind of extreme volatility that we are witnessing in last 2 weeks now, it is difficult to trade. So better to stay on sideline, not necessary to trade in this kind of volatile market. Focus on defensive. So defensives are looking attractive. We spoke about FMCG and also Nifty IT index that I forgot to point out that particular index. So specifically mid cap and small cap ITs are something that are looking attractive, and we are advising to initiate longs out there as well. And also not only mid cap but also large cap IT names are also looking attractive. So the focus is shifting toward defensive, and we are advising to stay light, stay cautious, till the time the VIX doesn't cool off below 15. Is not advisable to carry any aggressive long or short positions.
Right, ladies and gentlemen, with that, Nilesh bhai, thank you so much for your time. Have a nice weekend. Are you headed for that Coldplay concert in Ahmedabad?
No, sir. I'm
Did you
not a
see it in
big fan
Bombay?
of. Yeah, I'm in Bombay only.
No, did you see the concert in Mumbai?
No, I didn't see. As I mentioned, I'm not a great fan of these type of concerts, and I couldn't visit there.
Okay, no issues at all, sir. Have a nice evening and have a nice weekend. Let's hope Monday brings cheer to the market. But Friday, ladies and gentlemen, has been a bit of a disappointment. That slow but steady decline towards 6-7 month lows continues. The Nifty, while it's shut shop almost at its lowest point of the day, is down 0.5%, 23,090. The Nifty Bank is down 0.5%, 245, and of course you've seen selling pressure across the board. We tracked 19 indices out of 19, 18 are in the red. The lone index that managed to save the day was the IT index, and that's primarily because of stocks such as Emphasis, stocks such as Persistent. In terms of losers, it was Dr. Reddy's that set the tone for the third quarter, and that set of numbers which the market did not find fancy was the reason why Dr. Reddy's was the top loser, and it also made the pharma index amongst the top losers. The small cap index lost 2.35%. The mid cap index is down 1.5%. The broader NSE 500 is down 1%. The advanced decline rate, ladies and gentlemen, is 447 versus 1964. So that's how the structure is. And let's on our way out also look at the Nifty index in terms of the weekly chart. The reason why the weekly chart is so important, ladies and gentlemen, is because it gives you an idea where the market could be headed. So we are now at 7th June lows, and this is how the week has ended. Next week, Monday onwards, you will have 5 sessions ahead of the budget. Let's hope that there must be some pre-budget rally in the market, but let's hope to keep our hopes alive. Thank you so much.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus will be on Persistent Systems earnings. Well, solid set of Q3 numbers is what the company has reported, and the stock has also reacted sharply in the initial trade.